Welcome to Mark Arnold's Finance. We got quite the sad video today. In fact, the saddest you will ever see. So grab some tissues and be prepared. Before we get into that though, I will say that my portfolio made a little bit of gain today. Let's take a look. I am being transparent like I promised, so be sure to subscribe to my channel. Follow along, don't miss an episode. If we look here, we can see that my portfolio was down 3.76%. Now it's down 3.54%, so a tiny gain, but I'm not betting my money that this ain't gonna go a lot further down. So I just wanted to quickly show that to you guys. Now, get prepared. This is going to be sad. So let's just roll right into it. Wait a second, that doesn't have to be how this goes. Let's change this narrative and let's go get us some stocks. What a drive that was. Whew. Well, what I can say is, right now, fix my hair from that drive there, that crazy drive I just did. I do drive like that in real life, people say. But what I made this video for, I wanted to make it fun, different. Hopefully you kind of enjoyed it. But the point being is, right now, there's a lot of fear in the market. And I don't think it should be a sad thing for us long-term investors. I think it should be something we get excited about. In fact, I've shown this chart before. I'm going to show it again because I think it's so important. This is a chart that shows in the history of the stock market going back to the 1950s, those little tiny red blips below that 0% line are the recessions, and they last on average 11 months. But the powerful expansions that happen after a recession last on average 67 to 69 months and makes up the majority of the time of the stock market. So right now, I think is an opportunity we have that we won't get for another decade or two or more. Now, that's not to say you go dump all your money in the stock market, because that wouldn't be smart, because we can still go down quite a bit. In fact, this drive that we're going on where we're trying to get those sales and add to our stocks, it could go on a week, it could go on for another 2 years. We don't know. So that's why I always recommend averaging in to take advantage of things going lower and lower. And if things do go up, well, hey, we still went down quite a bit, and I don't think this will be a quick recovery like they say. Of course, today, when I'm making this video, so I won't know, but I might post in the comments, we're gonna see how much the Fed raises rates. They're saying possibility of 75 basis points. Last time it was 50, maybe even 100. So, with all that said, I think it's important to keep in mind the opportunity we have in front of us. And that is, we have lots of companies now that have gone down massively, as we saw in the first sad part of the video. And if these companies that are still growing, have great cash flow, are down 50 to 70%, and you have done your research and you believe that it's a good quality stock with a big moat, with a bright future, why wouldn't you buy those stocks? Diversify, right? So all I'm saying is, instead of letting fear get in, the fear index is really high right now. People are selling, freaking out. I won't even mention the crypto market. That's a whole nother animal. But for stocks, what I really believe in, because they are productive assets, And these companies are working hard day in and day out to make money, to improve their profits and their efficiencies and lower their expenses. All you have to do is buy shares and they do the rest. And not to mind you, dividend paying stocks that will return money to you to reward you. It's just a great thing, and I think we won't see this happen again for another decade or two. So, keep buying like you have, maybe up the amount you buy for a while until we see things start to turn around. And that's my advice. Let me know what you think of that. Let me know what you think of this different video, and I hope you guys have a great day. We'll see you very soon on Mark Arnold's Finance.